Aloha everyone, Joshua Hayes at BigWaveTrading.com. Going to do a short video lesson tonight because actually we're pulling back properly now. So for 2 days in a row, we've pulled back on lighter volume in the Dow Jones Industrial Average, the S&P 500, and the Russell 2000. Russell 2000 actually led today, so positive divergence there. That's good. The NYSE advanced decline line's holding up. But unfortunately, the NASDAQ, look at this stupid V-shaped move higher again. In volumes just decreasing each day. I'm pretty sure I know how this is going to end, but at least we're pulling back on light trade. But with that being said, with the light trade, today was the lightest volume of the year, and there's really not a whole lot to look into that. Just going to go ahead and just mention the market's very, very, very complacent right now. If you're expecting huge returns, I don't know how the hell you're going to get it with the VIX so depressed and the put-call ratio, I think, right around 0.75 following today's session. So there's no fear out there whatsoever. But I do got to mention, it is good that the VIX did jump a little bit today. And it jumped more relative to how much the market was down. So that is good to see. But until we get that VIX getting back up there into those mid-teen ranges towards the 20s, it's just going to be hard to really expect any huge returns from any new long positions at this complacent level in this low volume summertime trading during poor seasonality. Going to the trades today, you can see I completely forgot to post the new speculative long position last night. I posted in the chat room. Chat room's been very quiet lately. Don't know where everyone is at, but I assume you're enjoying the summer, which is cool with me because there isn't much to really go over except for just to hear me complain about how insanely strange the market is. Most strange market I've seen since the 2000s in terms of bifurcation. Worst performing market that I personally had on my personal end since 2011, 2012. I'm pretty sure it's not me. Just saying. But those are the trades today, as you can see. EBF. USNA, sorry that I forgot to mention EBF, but it was in the chat room. Most of the stops today, pretty normal. There were a couple of huge earnings losers, but TTGT, I only had about 20% of my long position left. ENG was nasty, and RKDA, just another example of how, with earnings, I'll show you what RKD did today, because by the end of the day it's not even a sell signal anywhere. So this is still a long position I'm tracking on an end of day basis for subscribers. If RKDA moves all the way back to 32 without me, congratulations everyone if you're trading on an end of day basis, but for me I'm completely knocked out. So market's just a little crazy. It's summertime, most volatile earnings season ever in one of the most expensive markets ever with one of the lowest correlations ever. Not sure how this is going to turn out, but it's hard to believe it turns out well. Maybe we're out another 5-10%, but whenever that downtrend comes, I'm pretty sure it's going to be bad. Get into the sell positions, pretty clear cut. Low below the 50-day moving average on above average volume, that's a 50%er. TPIC closing below its 50-day moving average, that's a 50%er. By the way, half of what I have left is here. My final sell stop is now here, so 50%. 100% for TPIC. Serves as a 50% sell signal, closing below the recent August lows in the 50-day moving average on heavier volume. Half of my sell stop is right here, 50%. My final is right here, even though I'm long from here since there's no green bop in this chart. I'm not going to let this thing just roll over and give it some room to work. I'm going to go ahead and get out. Loxo is a 50%er. I no longer have a position. If I did, my final sell stop would be these lows right here or the 200-day moving average, and it looks like we're splitting hairs on that end. CERC, this is a 50%er, but how I have my stop staggered because I'm already knocked out of half of it because I moved half of my sell stop to right here, got knocked out of half. Technically, this is another 50% sell signal, but here's how I'm doing it. 25% here, same price, 423. 25% there, 25% there, 25% there. Why? It's all splitting hairs. You could put 100 here. You could put 50 there, 50 there. You could put 50 there, 50 there. You could put 100 here. Put 100 here, here, here. Doesn't matter. And since commissions are only $1 on my end, and each of these trades should be at the very minimum. I forgot how much I have left, but at least it'll be over $100 each trade, which means it's less than 1% per trade. I'll do that every day, all day long with my win-loss and pain-to-gain ratio. 25, 25, 25, 25. And then for the full sell signals, TTGT, spectacular failure. Earnings season, wow, it's a fun one. ENG also pretty bad, but at least this one was orderly. Opened at the highs, closed near the lows. First stop was here. Second stop was here. Was knocked out intraday, as you saw on those intraday stops page. And then AGM lost this position eons ago. I think it was here in September when it undercut this low. So I was knocked out intraday, but still tracking on an end-of-day basis for members. Following today's session, that's a full sell signal. It's a confirmation of the confirmation. Close below the 50-day moving average. Final sell signal on extremely heavy volume, negative, ugly price velocity, and red bop. That's always going to be a full sell signal. So that's it, and leads us to our only long signal of the evening. ETSY. ETSY, I am already long. My initial long position, you see the white arrow is from here. So I already have a 70% gain in it. See that kind of return that we got back then? Did you notice that came after a depressed pullback? Notice then how an elevated VIX allows for stocks to make big potential returns. So that's why I always prefer to buy when panic is in the air, because when chart patterns like this one right here, just like that one, even though it was an earnings winner and it was gapped up high, this would be better. So if this signal in this chart would have triggered back there, it would have been a larger position. But as it is, everything is wrong. Go watch the last 10 video lessons I've made. Go read the last 10 new positions page. So Etsy came in triggered in my cancel scan. Also, obviously, my perfect speculator scan. It's an add signal. Now, normally, that's only 1 plus 0.5. But because this is such a good-looking chart and it's in the cancel perfect speculator, I treated it like I would in a market that would slowly be showing signs of it getting itself healthier. 1% for canceling, 1% for perfect speculator. If this was a new long position for me, it would have been a 2% long position because my risk is very minimal to the previous measure moves uptrends. Even if I use this previous uptrend right here, that's a 54% move. And if all hell breaks loose and I'm wrong here, I lose, let's say 10%. That's 5-to-1 reward risk ratio. Now, if I can get even more from it, like a 100% move, you can do the math. That's over 10-to-1, 13-to-1. So Etsy, really good signal. But Etsy, limit order, 44. 1%, 44. First cut loss level right there. 1 cent below today's low day, 41.83 for the add signal. Final cut loss for the add signal right there. That's the low in this base right here, 39.14. And that's the only trade. There is one new speculative long position, and I will remember to post that, but I think everybody should just ignore it. Focus on this one. And if this one fails, don't be surprised. It's summer, bad seasonality, no volume. Uptrending on no volume, overbought, complacent crowd, VIX at 10, put call ratio complacent. You know, I wouldn't expect much. But if Etsy ends up running 25%, and if I don't take this trade, I'll hate myself. So I'd rather take the trade, be wrong, than not take the trade and watch it run without me. All right, everyone, back to the football game. Aloha.